Good morning. It's June 9th. It's Al Robinson. It's about 7 o'clock in the morning, and I wanted to just answer a question today that came up yesterday, and it was around what is my mortgage payment going to be? Well, just like all the other answers in our world, it depends on a lot of different factors. But let's start with the basics. When you make a mortgage payment, most people, what happens is they have their principal and interest payment, they have their real estate tax payment, they have their insurance payment, and if they put down less than 20%, they have what's called private mortgage insurance. All of that lumped together goes into the mortgage payment that you make each month. Keep in mind that when you own a property, there is typically in South Florida a homeowners association or condominium association payment. However, you pay that directly to the community or the property manager. So it's not part of your mortgage payment that you send to me, but it is a cost of owning the property. Now, where the details are is that if you put down 20% or more, you do not have to include the taxes and insurance in your payment. You can make those payments on your own and have your monthly outlay to your mortgage just be your principal and interest. Most products now, as you probably figured out from 2010, don't have a prepayment penalty. So you can always send in extra for principal each month on your mortgage payment, that principal and interest portion, or you could send in extra per year if you'd like to pay your loan off faster. But what happens most of the time is that the customer wants to pay everything in one payment, have the bank pay for their taxes when they come due in November, have their insurance be paid when it comes due on the anniversary of the policy, and then last but not least, they take care of their own HOA fee. As far as the numbers that go involved with that, this is where you really should lean on a local lender versus out of state or digital lenders because there's local customs and local prices that are much different. For example, I have a house in North Carolina, and there the real estate taxes and the homeowner's insurance are ridiculously cheap, which if I try to project payments in Carolina, I wouldn't do a good job being from Florida. I'd way overestimate the taxes and insurance. Conversely, if I was in Detroit trying to predict what the insurance cost would be in Florida, I'd be very wrong also. So when you do your pre-approval or your pre-qualification, I suggest a local lender, somebody who's done it a while, and they'll have some good numbers for you, whether it be on the mortgage and the interest rate or taxes and insurance. So you go out and look at properties that you can afford and want to afford versus getting disappointed. Have a great day. If I could help in any way, Al Robinson, 954 415 6133. Have a great day.